Where are rates going? I don't know. Let's check it out. Rates, mortgage rates, giving you quick updates, seeing how they're flying today. So let's take a look and see how rates look today. And are we getting a little better? Are we getting a little worse? Let's look at it. Let's take a quick look. Let's get right to the point here. And there we go. Let's take a look at what's going on. So what's all this mean, right? Let's review it again really fast. When you see this, this is the chart for mortgage-backed securities. As they go down, that means rates go up. So what do these little things mean? Well, this is called a candlestick. And when it's red like that, that means it went down that day. This is the movement of the day. So you can see today, it looks like we're getting a little better. We had to go up a little bit. 14 basis points right now is where we're looking. So that means we had a little reprieve in rates. We watch these things every single day to monitor what's going on. And we've seen a huge shift in rates since 2 weeks. In 2 weeks, we've seen rates drastically change from people that have been getting an idea of what they wanted to do and thinking about it. During that thinking time, rates continue to go up. We got a little bit of a reprieve here. So we got a little bit back, and we hope we might see a little bounce back and we may get some improvement. But I'm telling you, if you're shopping and you're thinking about it, you need to look at locking in pretty quickly, because these things are moving. And we do have a little bit of a float here, which is great, which is a good thing. But the long-term play, or rates are going to move. And so if you're looking to buy, that of course lowers your buying power. But if you're looking to refinance, it's not necessarily a negative thing, because your equity is still climbing on these houses. Equity is still going up because of demand and what's going on demand for houses. So there's opportunity if you own a home and you're trying to pull some of that equity and use your equity, because equity is only good if you use it. It only does you really good when you sell or you pull it out. And so that way you can capture and use it to manage other debts or to start businesses or whatever you'd like to do. And we can break all that down with you and get into the heavy lift of that. Also, if you're out and you're shopping and you're talking to other lenders and you've got quotes and you don't understand them and you want to see them, we'll take a look at them. We go through that, break it down to you in video, break it up into a very easy to understand presentation, and send it back to you so you can understand what we could offer versus what is out there. Because whatever you bring to me, if it's going to be better than what we can offer, then it's probably a good deal for you, and we'll let you know that. So, but we'll give you that second opinion. That's what we're here to do. But in general, I want to let you know, giving a quick update on where rates are going today, it's a better day. It's a better day. And so when I'm doing these periodically to let everybody know where rates are going, because that's a big question on a lot of people's mind. So this will give you an indication, but you can see this long trend up. Even though it's down, that's a long trend up of rates going up. That's going to continue. We're going to see that because they have to do it to curb inflation. The beauty is, as inflation gets curbed, we usually see in trends of recession, values go up and rates come down. So the long play is good. So we will see a good swing, still bringing equity, but still giving better rates in the long play. In the short play, we are going to see them go up. And so if you're looking to purchase a house, you're still seeing an upward swing in value. So now's a good time still to look at purchasing, because I've seen many people 2 years ago telling me they're going to see this crash and we're going to wait it out. And 2 years ago, that $300,000 house is now $400,000 that they want to buy today. So they could have purchased it then at really low rates. Let's say they purchase it now at the higher rates. When rates do change, you can refinance that out. So, but still capture the lower price and take advantage of the equity. So these are things you got to think about. We'll sit down, talk these things through for you, because we are seeing that trend up The charts show it. The demand shows it. It's all there. It is a different market than what we saw in 2008 with the crash. The crash was related to bad mortgages and things that were written in a different way. The way a mortgage is written today, completely different, solid file. You're not going to see those mortgage backs crash. You're not going to see those securities go in the tank. That's not going to happen. And right now, foreclosures, if you look at foreclosures, they're not sky high. And also, if you were going into foreclosure, you could sell your house like that anyway. So, and as a matter of fact, if you're a realtor, you may want to look for people that you can get databases of people that have bad credit that own a home that might be in a situation where they might be having to foreclose. And that's a good person to reach out to sell their house, because in this market, they can sell their house and avoid foreclosure. So it's a quick way to capture some listings. So just think about that. Anyway, this is the quick update on the market so you know what's going on. And if you have questions, reach out. If you want second opinions, reach out. We're here to help. We are making it happen. We're right here. We're your local lender. We can lend all over the country, but we are your local Alachua lender right here. Anyway, I think that's all I have for today. Talk to you later.